So, are you struggling with identifying good opportunity in the stock market? I'm going to break down today in this video how we cleared 186% ROI trading Tesla, but using very simple entry criteria. Now, for the longest time, I used to hop into the market based strictly off emotion. Although that's really fun, that's never going to get you across the line to actually making money. Until you develop a repeatable approach that you actually trust and believe in, you are always going to leave it up to the market's hands for you to become consistently profitable. And today in this video, I want to show you our repeatable strategy, our approach, and what I look for each and every single day. So before you're going to see here, this is our recap here of where I took the market short, how much money I made, and what exactly was going through my mind. So I love trading Tesla on Fridays because it offers phenomenal opportunity trading 0-day options, okay? So this is how we were able to clear over 180% return. 180% return is not always going to be attainable. But if you understand our strategy and you apply it in the correct market conditions, this is something that you could do a lot of the time. So the first thing I want to break down, okay, is our 3-step approach. All right. So about 13 months ago, I decided that I was going to collect data on one specific strategy. But it couldn't just be any strategy. It needed to actually work, and I needed to believe in it. So I set out and crafted the HPT crossover. All right. And before you're going to see it. And if you want to access this, all you have to do is click that link below in my bio. And it's going to bring you to my website where I break this down in deep detail. So it consists of 3 main steps, okay? Number 1 is you identify a critical level. A critical level is any daily time frame level, right? This means it's a previous day high, low, open, or close. There's 4 main price points on a daily time frame level. A critical level represents each one of them: the high, the low, the open, the close. Step number 2 is you're identifying the moving average cross, okay? We have recently tuned this to, you don't necessarily need a moving average cross, but you do need some sort of relationship with the moving average, whether that's the 20 EMA, whether that's the 5 EMA, the 9D EMA. I use a bunch of different moving averages. But the important thing is that price is respecting the moving average, okay? And then number 3, this is the most important part. Most important variable factor of this strategy is learning to identify the RBI and the GBI. Okay, this is the red bar ignored or the green bar ignored. So when you take all 3 of these and you sandwich them, you put them together, you are going to have an edge over the market. You're going to be able to, hear me out when I say this, guys, stop taking irrational setups, right? Because we all know most of us are inconsistent just because of the bad trades we take. It's not necessarily our good trades. It's the irrational, emotional, I just want to participate trades that cost us the most money. So when you start following this approach, you stop doing that. That's what's so important. You're no longer just participating to participate. You're no longer, because it rationally doesn't make sense to you. And that's where I want to help you guys get, okay? I want to get you guys to the point where you're only executing when the market's telling you to, and it's never based off emotion. So click this below, get involved, and I just created a phenomenal 90-day program called the 90-Day Renewed Alignment Program. And this is specifically for traders who are trying to build a new relationship with the market that is based off confidence, control, and conviction. So take advantage of that. It is a phenomenal resource. So let's break into the trade that we took here. Tesla, we cleared over 186%. Josh, what made you take this trade? All right. So first things first, what I want to do is pull up the 1 hour time frame. The 1 hour time frame is extremely important to me, and I'm going to explain why. The 1 hour time frame gives me the context I need to understand the market story, the market sentiment. The market communicates to us with market structure, with candlestick patterns, and with moving averages. So I am a day trader, and chances are you probably too. If we're day traders And we want the context, the appropriate context, right? We're not going to look at the weekly chart. A bullish weekly chart means almost nothing to me, right? I need a larger time frame. It can't be too large, right? Because I want it to actually serve the sort of trade I'm trying to capitalize on, which is an intraday day trade. So I'm going to use the 1 hour time frame. Now, once I've identified my critical levels, which is previous day high, end of day, previous day open print, and previous day low. Okay, we have our 4 main price points, right? Right here, and EOD and PDH are up there. All right. So now I want to point out this guy. You guys see this yellow line right here. Okay. This is called the critical level of interest, the structure. Because when I'm looking at this chart here, I see somewhat of a bullish rally from the previous day. Okay. And then I want to ask myself, how am I going to know if it's still bullish once the bell goes off? So if the market communicates to us through market structure, I'm going to identify a level of structure. This is the easiest way for me to understand if it's still bullish. We have a supply zone that has been rallied through, okay? So now we're coming back for a retest in pre-market. So it is going to be extremely important to identify who controls this level. And if buyers lose this level, where can we target? Okay? This is why I was extremely interested in Tesla, because there was no downside pit number, okay? Meaning a previous day high, low, or open and close, all the way until 429.10. I also identified a 43288 as another critical level, which would have been a perfect spot to target. And that was where we target. So basically, my pre-market plan looks like this. Whoever can control 45551, I'm going to trade with. If buyers get above PDH and EOD, cool. I'm going to target 453. But if sellers take 45551, I am then going to target 43288. So what is the most important level on this chart? This guy. This level is going to serve me the most. Whomever controls this level, I'm going to trade with. You're going to hear me say that all the time, especially if you're on my Discord. If buyers control EOD, I'm looking to target PDH. If sellers control PDH, I'm looking to target EOD. Right? Because I've collected enough data to know if this pit number can't hold, all of the volume and liquidity are way down here. So large money is going to push price down there. There is an 88% chance that that's going to happen. The days it does not happen tend to be holidays, very low volume days, etc. So I am going to target the next pit number. This creates a phenomenal opportunity for me to capitalize on 186%, okay? Because I know here, right, and we'll just play this out, as price opens up, right, let me drop down to the 5-minute here. Market opens up, and what happens? We rally into previous day high and end of day. And then remember, guys, 44551 is our critical level of interest, meaning whomever controls this level, I'm going to look to trade with. Sellers push down below it. All right. So sellers have shown their dominance at EOD, at PDH, and at 44551. But I'm not just going to get into the market because there's some selling going on. I want to get into the market based off my 3-step approach. Okay. I want to use my repeatable strategy to serve me in a way where I am not vulnerable. I want to get in at an RBI and a GBI. Okay. I want to get in as prices respecting the moving average. I want to get in where I know sellers are dominant and the trend is healthy. Okay. This is something I dive extremely deep into with all new members that join that renewal alignment program. Okay. Because for you to build that relationship that you're yearning for with the market, a relationship that's not toxic, that's not based off emotion, that profitable relationship that you're not making reckless or trades that are filled with anxiety, right? You're just executing. You're in flow state. For you to build that relationship, you're going to need repeatability, okay? We've all made money in the market, but we've all also been in our bed at night going, dude, can I do this again tomorrow? Did I get lucky? See, I don't want you to get lucky, and I don't want to get lucky. I want execution off my strategy, off my edge. This is what builds confidence. And when your confidence is built, that's when you're able to scale. That's when you're then able to hold on to trades much longer. You guys understand what I'm saying? This is so important. If you want to become that trader that can hold on to positions, right? That's actually able to use his skills appropriately, because fear's not in the way. If you want to become that sort of trader, these are the sort of tools that you're going to have to develop. You're going to need these skills. So price sells off, and we get ourselves a green bar right here that gets ignored, okay? And you're going to notice something. We enter into the market short. This was our first trade. We ended up getting stopped out of this trade. Green candle, ignored. We drop down to the 2-minute time frame, and we identify our entry. Josh, what do you mean drop down to the 2-minute time frame? Let me explain. Because this is where the magic happens, okay? So as I'm entering into the market short, where are you? Right here. I'm not just hopping in because I got my green bar that gets disrespected. I'm hopping into the market as soon as that 2-minute 20 is respected. And guys, listen to me when I tell you this. If you can learn to trust the moving average, you will be able to capitalize off massive moves on trending days. Massive moves. Like, moving averages are your guideline. They are going to help you control your emotions. They're going to tell you what's really happening when your heart and emotions are telling you that, oh my God, it's going to reverse on you. Oh my God, you're going to get stopped out of your trade. Oh my God, what if this, what if that, right? Moving averages aren't what if, they're even if, okay? Even if this reverses, if the moving average gets respected, I'm staying in. Even if it doesn't look the way I want it to, as long as it's respecting the moving averages, I'm staying in. Right? This is what moving averages do for me. So I enter into the market short. We get a nice little move down, but we end up getting stomped out of the trade. So be it. So then let me whip open the Discord just so I can show you exactly where it was. I actually entered into the market and called it out for the Discord. So right here at 11, what is it? Bam. 45 a.m. I'm writing in the Discord, Tesla shorts for one more time. Okay? Now, once again, it's all about repeatability. And what I'm doing here is trading off this critical level, right? Or I'm sorry, this green bar that was ignored. Let me just pull it up over here so you can see it on TOS. So if I go over to TOS, right here is 11:45, okay? This candle. So we got our green candle that's disrespected. We hop in the market short, okay? This is what it looked like on the 5-minute, and this is what it looked like on the 2-minute. Right there. Bam. And I tell you what, this isn't anything special. This is literally just raw dog execution. But more importantly, I'm super confident in this strategy because I've collected 13 months of data on it. Does it always work? No, not at all. Right? I literally get stomped out and then I get right back in as long as the opportunity presents itself. Okay? We're currently sitting at like a 79% win rate. Is that perfect? No. But that is plenty. Okay? And if you're able to really execute it properly, this is where the magic happens. So we enter into the market short. One more thing that I really liked about this was the fact that it was respecting the 20 EMA. So we hop in the market short, guys, and look at the 2-minute 20. Dude, are you listening to me? Listen. The 2-minute 20 was a wall. It was an absolute wall. Look at this. Price comes into the 2-minute 20 right here. Bam, bam, bam. Okay? Once again, I'm understanding the context. I understand that the 1-hour trend is healthy. Okay? This is the 1-hour 9. We are close to price. We're close to the 1-hour 9. So this gives me a lot of confidence that the trend is going to continue in the appropriate direction. So if I go back to the Discord, I'll just show you what I was updating here, just to kind of give you guys an idea. Market's selling off. Tesla's pushing down right here, right? Just nothing crazy. Once again, we entered into the market right here, but I'm using my moving averages to guide me, okay? And then what happens? Price comes in at 2-minute 20. It continues to hold, right? So here I am updating for my team. Okay, guys, let's continue to hold. This thing is going, right? And then once again, the 2-minute 20 continues to hold, continues to hold, continues to hold. 1 hour's bleeding, still holding this at 2:01. Got in at 11:45. Okay, so this is literally, we're going on hour 3 here. 2:05. We rally into our first target. Didn't take it. A lot of volume. 2:21. Right? Look at this. And the list just goes on and on. I booked it at 2:41 a.m. Now, once again, like, there really isn't and this is where I sold it right here at 240. Okay, so quick recap. What can you take from this video and apply it to your trading so that you can trade with way more confidence, control, and conviction? Well, what did I use here? I used a GBI on the 5-minute time frame. I used the 2-minute 20 to hold it, and the 1 hour moving average to give me the context. Context is key. If you want to trade with tons of confidence and you want to stay on the right side of the market and you want to learn to hold your trades longer, you will study the 1 hour trend. Take advantage of the links below, guys. Get involved. Get that free mini course on my website just to get more information on this strategy. And I absolutely appreciate you guys. I love you and your support. I appreciate you guys coming to our sessions every Friday. Make sure you like this video, and I'll see you in the next one.